Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, Global Strategist at Yuanta Securities. Mr. Yu, good afternoon. Thanks for coming on today.
Good afternoon.
Well, stocks in New York were again fairly subdued on Monday, with the main indices mixed for the session. Still, it seems this uncertainty about that employment report, what it means for the U.S. economy, possibly giving the Fed room to be more aggressive. What's the story in the global markets?
Yes, the regular trading day of Monday, Dow rose by 0.09%, while the S&P 500 and NASDAQ declined by 0.12 and 0.1% respectively. So pretty much U.S. market was flat. If you look at the last week's jobs report, we had a total increase in job by 528,000, which is significantly bigger than expected number of 250,000, twice more than that, and therefore people are quite uncertain that the economy is quite hot in that such that Fed needs to raise interest rate more aggressively than slowly raising interest rate in the future. If that's the case, then obviously liquidity condition is not going to be positive, and the market might not be able to rise further. Also, if you look at the NVIDIA's revenue forecast, the guidance came in at much weaker than expected, dragging down the share prices by more than 6%. So there's quite a bit of uncertainty regarding what's happening to the economy versus what's happening to the earnings of the companies. So therefore, the market is quite uncertain right now. Of course, we'll have to wait and see what the CPI number is going to come in this week. If the numbers come in higher than expected, then obviously the rate hike might continue to be very aggressive, and therefore the market might not be able to rise, and people might start to expect some kind of recessionary period. But if the inflation numbers come through much weaker than expected, then of course the Fed rate hike will be slowing down, and therefore the market will be in a better position to further rise in the future.
Right. Well, Korean stocks were lower this morning, but a sharp rebound in the afternoon. Samsung Electronics was still down at the end of the session, but SK hynix with a sizable gain, and entertainment stocks strong right now, too. Tell us about the domestic market.
Yes, right now, if you look at the Kospi, it's quite confusing per se, but nevertheless, it was trading at a very cheap valuation. Therefore, the market seems to be rising slightly. Kospi was up by 0.42%, and Kosdaq is up by 0.34%. If you look at the overall foreign investors' activities, they're not really buying or selling, so pretty much flat. But while they were net buyer of 600 billion plus of the futures market, so clearly directional-wise, foreign investors are expecting the market to further rise in the future. The reason for that is because the Korean won seems to be stabilizing. Of course, it's still above 1,300 territories, but it seems to be in a track where it might be further appreciate gradually. And if that's the case, then foreign investor interest should continue to happen. However, if you look at the sector-wise, there's uncertainty regarding the semiconductor stocks because U.S. have passed the bill to boost the domestic semiconductor manufacturing and science research, and that might cause some of the competitiveness to decline for Korean chip makers. But nevertheless, the competitiveness of Korean chip makers are very strong, and therefore we think the market share is not going to be dwindling in the future. But in any case, the market reaction is that Samsung Electronics and SK hynix were down somewhere between 1% to 2% territories. Overall, Korean market seems to be quite resilient. We think the fair price of Kospi is about 2,700. Right now has recovered to 2,500 territories. We think that there's a bit more room for further rise. In order for the market to further rise, of course, it will depend on what U.S. might be doing in terms of interest rate hike and the CPI numbers, the inflationary pressure.
Well, Mr. Yu, you mentioned how the exchange rate is stabilizing, but it's stabilizing at a historically high level, around 1,300 won to the dollar. Foreign investors have continued to buy Korean stocks, or the futures at least, but it seems like the appetite for dollars right now is just too strong as a safe haven. What can we expect to see with the exchange rate going forward?
Right. The reason for dollar being very strong is because, as I said, the overall labor market is very strong in U.S. If the wage increase is very strong, domestic consumption is very strong in U.S., U.S. dollar might not be depreciating. That's why the people are quite uncertain. However, once the CPI number comes through, and also once the Fed shows that they will slow down in terms of interest rate hike, 75 basis point to 50 basis point, if that changes, then we think that the Korean won will be appreciating while the U.S. dollar will be depreciating. Overall, right now, if you look at the current account surpluses for Korea, it continues to be quite positive. And also, if you look at the Korea's government debt as a percentage of GDP, it remains to be only 50%. Of course, there's uncertainty about the consumer debt as a percentage of GDP at being 106.6%. But overall, fundamental conditions of the Korean corporations are very strong, and the government conditions are very strong. So therefore, we think that the Korean won might not be depreciating in the future, but rather appreciate. Gradually, we think that there's room for further appreciation by somewhere between 3 to 5% over the next 6 months.
All right, we'll keep an eye on it. Mr. Yu, thank you as always for making time for the program. We really appreciate your insights.
Thank you very much.